Imagine you're lost in the middle of a desert. In front of you are two choices: a bottle of cold water and a massive diamond mine. Which one would you choose? I'd bet 99% of you would go for the bottle of water. Because in that moment, real value isn't found in diamonds. It's found in whatever keeps you alive. But strangely, in today's investing world, most people still chase the diamond mine. They run after gold, inflated real estate, or overhyped stocks and crypto coins, forgetting one simple truth: price is never the same as value. More than 250 years ago, a man named Adam Smith saw this clearly. He wrote The Wealth of Nations, the foundation of modern economics. And if you've ever wondered why markets still act crazy, why people keep buying things they don't understand just because they're afraid of missing out, then this video will give you the answer. Today, we'll explore 6 timeless ideas from The Wealth of Nations and uncover why, in the age of AI, crypto, and the endless get-rich-quick craze, the real winners are always those who understand where true value lies. So hit like and subscribe, because this isn't just about economic theory. It's about you and every investment decision you'll make from this day forward. Part 1. Labor, the true source of value. In The Wealth of Nations, Adam Smith laid the foundation for modern economics with a seemingly simple yet revolutionary idea. Labor is both the measure and the source of real value. According to Smith, a nation's wealth doesn't come from how much gold or silver it owns, but from the productive power of its people, their ability to create goods, services, and useful value for society. Smith viewed the economy not through numbers, but through people. Every product, whether as simple as a pin or as complex as a steam engine, is the result of hours of labor, skill, and organization. He used a now famous image. A single pin maker might produce only a few dozen pins a day, but if the work is divided, one person drawing the wire, another sharpening the tip, another packing the pins, productivity increases 1,000-fold. This division of labor and specialization sparked the great leap in productivity and became the very root of wealth. From this perspective, Smith made a clear distinction between two concepts that are often confused: price and value. Value in use comes from how useful something is and the amount of labor required to produce it. Value in exchange is the temporary price the market is willing to pay, shaped by supply, demand, crowd psychology, and even speculation. Smith illustrated this with the famous water-diamond paradox. Water is essential for life, yet cheap. Diamonds are nearly useless for survival, yet extremely expensive. Why? Because water is abundant and easy to obtain, supply exceeds demand, while diamonds are scarce and highly desired. Demand exceeds supply. From this, Smith revealed a crucial paradox. The most useful things are not always the most expensive, and the most expensive things are not always the most valuable. He argued that price is merely a temporary expression of value, influenced by the forces of supply and demand. True, lasting value only exists when it's backed by real labor, by human skill, productivity, and effort. That's why Smith believed a prosperous society is built not on trading or hoarding, but on productive labor and the efficient organization of work. In today's world, we can see this clearly in the global supply chain. Take the iPhone, for example. Its price may reach thousands of dollars, not because its materials are rare, but because it embodies millions of hours of labor. Engineers in California, programmers in India, factory workers in China. Its value comes from human intelligence and effort across the globe, not from the metal or silicon inside it. Conversely, when price becomes detached from real labor, bubbles form. Smith didn't use the word bubble as we do today, but he warned about prices inflated by emotion and expectation.
When demand is driven not by real need, but by greed or fear of missing out, price drifts far above value. History has shown this again and again, from the 17th century tulip mania in the Netherlands to the dot-com bubble in the early 2000s, and more recently, the explosion of cryptocurrencies like Bitcoin. Viewed through Adam Smith's lens, Bitcoin is a textbook case of price separating from value. It does require some labor, energy, and effort from miners, but most of its market price comes from belief and speculation, not from real utility in production or consumption. Its scarcity is artificial, and its demand is emotional. Smith would likely say, "You can put a price on anything, but only what's rooted in labor and usefulness holds lasting value. Otherwise, you're just buying an illusion of value, something the market may glorify today but abandon tomorrow." And that is the most fundamental lesson Adam Smith left for modern investors: to understand the origin of value instead of chasing the fluctuations of price. When you can tell the difference between price and value, you stop following the crowd. You're not fearful when others are greedy, and not greedy when others are fearful. Because you know, as Smith once wrote, the real measure of the value of any object is the toil and trouble of acquiring it. Or more simply, human labor is the truest measure of value.
Part 2. The Invisible Hand and How Modern Markets Move and Distort. More than 200 years ago, Adam Smith wrote about the invisible hand, one of the most enduring ideas in The Wealth of Nations. It describes how markets naturally regulate themselves through individual self-interest. When each person, the baker, the farmer, the blacksmith, pursues their own gain, they unintentionally contribute to the well-being of society as a whole. No central plan, no command from above. Yet the market runs smoothly, as if guided by an invisible hand. Smith believed that personal interest within a free competitive system would create a natural balance, where supply meets demand, where prices reflect true value, and where people are rewarded for their skill, effort, and creativity. But he also warned, if that invisible hand is manipulated by power, monopoly, or collective greed, the market becomes distorted. And that, unfortunately, is exactly what we're seeing today. Look at the world's biggest markets: gold, diamonds, real estate, and crypto. On the surface, they appear to represent real value, but peel back the layers of marketing and hype, and you'll see that price and value have drifted further apart than ever. Gold, once a symbol of preservation, is now traded thousands of times a day by hedge funds that have never touched a physical bar. Its price no longer moves with jewelry or industrial demand, but with the clicks of traders around the world. Diamonds, once seen as a symbol of eternal love, owe their reputation to a genius marketing campaign by De Beers in the 20th century. A diamond is forever, just a slogan, yet powerful enough to inflate the perceived value of a mineral that isn't even that rare. Real estate, once about having a home, a place to live, has become a massive vehicle for speculation. In major cities across the US, Canada, and China, home prices have surged 5 to 10 times faster than average incomes, not because their utility has increased, but because cheap money and FOMO have been fueled by media narratives and financial giants. And then there's crypto, a market where the invisible hand has been replaced by the very visible hands of whales, investors holding hundreds of thousands of coins, capable of moving prices with a single tweet. A random meme coin can surge 500% overnight, then evaporate completely days later. No intrinsic value, no real productivity, just herd psychology driven by hype and the illusion of quick wealth. Adam Smith wouldn't be surprised. He warned that when greed escapes moral and rational limits, free markets turn into playgrounds for those who can manipulate public emotion.
In such times, the invisible hand no longer guides people toward real value. It becomes distorted by the hands of oligarchs, hedge funds, and orchestrated media campaigns. Financial sharks understand one thing very well. People don't buy based on value, they buy based on emotion. So, they create stories to justify irrational prices, like Bitcoin is digital gold, a diamond is forever. You can make more people, but you can't make more land. Real estate never goes down. These slogans, when stripped of emotion, are nothing more than speculation dressed up as belief. Smith once wrote, "Nothing is useful which is not limited." When prices become detached from value, and greed becomes the fuel of the market, supply and demand stop finding balance. They become ruled by illusion. But here's the thing. Just as Smith predicted, the market does correct itself through collapse. Prices can be inflated, but true value always returns. That's the law Adam Smith saw more than 2 centuries ago, and it still holds word for word in today's financial world. So if you want to invest wisely, don't chase where the crowd sees price. Look for where the invisible hand is still quietly at work, where real value hasn't yet been discovered.
Part 3. The role of reason in investing. Adam Smith was not only an economist, he was also a moral philosopher. Before he wrote The Wealth of Nations, he published The Theory of Moral Sentiments, a book about reason, emotion, and how humans make decisions. It's the missing piece many people overlook when they talk about his ideas. Because for Smith, markets don't run on numbers, they run on people. And people are emotional beings. We're not calculators seeking perfect optimization. We fear, we hope, we get greedy, and we despair. Those emotions, more than supply and demand, are what truly drive the financial cycle. When stock prices rise, people believe they're smart. When they fall, they call the market crazy. But in truth, the market simply mirrors our collective emotions. Adam Smith once wrote, "Man imagines he acts from reason, but in reality, he is only rationalizing his feelings." And nowhere is that truer than in investing. When Bitcoin hit $60,000, when tech stocks soared 5-fold during the pandemic, when people were bidding above asking price for homes, no one was asking, what's the real value? They were asking, will it keep going up? That question is the voice of emotion overpowering reason. Adam Smith believed that reason is the anchor that keeps markets from drifting into chaos. It allows investors to tell the difference between price and value, between what people are willing to pay and what something is truly worth. But for reason to work, one must learn to step back, to look beyond the present moment and stand apart from the crowd. And very few people can do that. Think back to 1720, the South Sea Bubble in England. Nobles, politicians, even Isaac Newton, the greatest scientist of his age, lost fortunes. Afterward, Newton said, "I can calculate the motion of heavenly bodies, but not the madness of men." 3 centuries later, that remains true. Every investor thinks they're rational until the market heats up. When stock prices, gold, or crypto rise day after day, reason is paralyzed by dopamine, and the invisible hand of the market is replaced by the shaking hand of emotion. Smith understood that an economy can only grow sustainably when people act with morality and self-restraint. The same applies to every individual investor. Reason helps you buy when real value is overlooked. Discipline helps you hold when the market panics. If emotion is the flame, then reason is the lamp. It won't make you rich overnight, but it will keep you from burning out. Today, in a world where information spreads at lightning speed, emotions can turn into trends in minutes. A single tweet,
A viral TikTok or a CEO's offhand comment can trigger millions of people to buy or sell instantly. In this environment, staying rational isn't just an advantage, it's a superpower. As Smith emphasized, it is not the strongest or the smartest who survive, but those who adapt with reason. In investing, that means when everyone talks about price, talk about value. When everyone looks at profits, look at risk. When everyone acts on emotion, slow down and think. In a world where everyone is reacting to the heat of the market, the smart investor is the one who stays cool with reason. Because in the end, as Smith revealed long ago, prices may be shaped by emotion in the short run, but true value is always rediscovered by reason in the long run.
Part 4. Trade, Cooperation, and Productivity, the true source of prosperity. When Adam Smith wrote The Wealth of Nations in 1776, the world was obsessed with gold, silver, and the power of empires. Nations believed that wealth came from hoarding precious metals and controlling colonies. But Smith dared to say the opposite. The wealth of a nation is not in its treasure, but in the productivity of its people. It was a revolutionary idea, and it became the foundation of modern economics. Smith showed that trade and cooperation are the real engines of prosperity. When each person focuses on doing one thing well, the blacksmith making nails, the farmer growing crops, the carpenter building tables, and they exchange their products with one another, the total value of society multiplies. He called this the division of labor, and it is the cornerstone of productivity. The most famous example in his book is the pen factory. A single worker doing every step alone might make only a few pens a day. But 10 workers, each handling one small task, could produce tens of thousands. Smith realized that human strength doesn't lie in individual brilliance, but in collective coordination. Bring that idea to today's world and you'll see it everywhere. From global supply chains, where an iPhone is designed in California, assembled in China, powered by chips made in Taiwan, and sold worldwide, to small startups where remote teams collaborate through Zoom, Slack, and Notion. Each person contributes a small part, but together they create massive value. That was Smith's main point. Real wealth doesn't come from destructive competition, but from cooperative creation. A free market, guided by reason and morality, isn't a battlefield where one must lose for another to win. It's a playground where everyone can grow by creating value for others. But sadly, in the modern world, this idea is often twisted. Many people mistake economic freedom for the right to manipulate, speculate, or exploit. Crypto whales pumping coins, corporations hoarding land to inflate property prices, and speculators flipping gold or diamonds, they don't create real value. They just shift wealth from the naive to the shrewd. And that's not the kind of commerce Smith envisioned. Smith believed that true trade is an exchange of real value, not illusion. If I sell you something that genuinely improves your life and you pay me fairly for it, we both become richer. But if I convince you to buy something useless just because the price is going up, that's no longer trade. It's greed disguised as enterprise. Take a look at America's economy today. Finance makes up nearly 20% of GDP, while manufacturing is just a fraction of that. We live in an era where money makes money more than labor or innovation does. And this is exactly where Smith's philosophy becomes more vital than ever. An economy can only be sustainable when it creates real value, not inflated illusions. People like Elon Musk, Steve Jobs, or Jeff Bezos, controversial as they are, understand something Smith wrote over 200 years ago. Productivity and innovation are the roots of prosperity. Not because they're billionaires, but because they built products millions of people willingly pay for to make their lives better. Smith once wrote, "No man ever grew rich by making others poor." That single line captures an entire economic philosophy.
True prosperity comes when people create more together, not when they fight over what already exists. And in a time when asset prices are inflated and many treat investing like gambling, this stands as a powerful reminder. If you want to be sustainable, create real value. If you want to be wealthy for the long run, collaborate and grow with others. And if you want to understand true value, remember, it's not in what you trade, but in what you contribute to others and to society.
Part 5. When price exceeds value. The lesson behind every bubble. More than 200 years ago, Adam Smith warned in The Wealth of Nations, "Price may be driven by emotion, but value always follows the laws of reason." That single line feels like a prophecy for every era, because no matter how intelligent people become, we remain vulnerable to the same illusion. When prices rise so fast that we forget to ask the simplest question of all: what is this really worth? History shows that the gap between price and value is a recurring disease of humanity. In the 17th century, the Netherlands went mad over tulips, when a single bulb was traded for the price of a house in Amsterdam. Everyone believed prices would never fall, until the market collapsed within weeks. In the 18th century, Britain saw the South Sea bubble, where shares soared on promises of endless treasures from distant seas, even though the company had no real business at all. And in the 21st century came the dot-com boom, when hundreds of tech startups with no profits were valued in the billions simply because the internet is the future. The settings change, but the psychology doesn't. People buy not from understanding, but from fear of missing out. FOMO. In our time, bubbles exist everywhere, not just on Wall Street. Real estate, gold, diamonds, crypto, NFTs, all have seen moments when speculation, media hype, and the actions of financial whales pushed prices far beyond the actual value these assets bring to human life. A diamond, for example, as beautiful as it may be, owes much of its price to a century-long marketing campaign by De Beers, not to any inherent or functional value. A house, in theory, is meant for living, but when millions treat it like a speculative ticket, prices soar far beyond what real incomes can sustain. And crypto? Many coins rose not because of technological innovation, but because of stories told cleverly. When belief fades, prices collapse, revealing what remains: the true value. Adam Smith called this the distortion of the invisible hand, when collective greed disconnects markets from reality. He never opposed investing or profit, but he insisted that price should be a mirror of value, not a mirage. If you pay attention, every financial crisis in history begins with the same phrase: "This time is different." People convince themselves that new technology or a new era will break the old rules. But the laws of supply, demand, and value always return, pulling prices back to earth. When the dust settles, there are always two kinds of people left: those who chased price, riding the emotional roller coaster up and down; those who understood value, who waited patiently, buying only when a dollar's worth could be had for less. Modern investing legends like Peter Lynch, Warren Buffett, and Charlie Munger embody Adam Smith's philosophy. Buffett once said, "Price is what you pay, value is what you get." That line is in essence the spirit of The Wealth of Nations, a timeless reminder that every price must eventually come home to value. Recently, the markets gave us a vivid reminder of that truth. A trade policy shock from the US, a 100% tariff on Chinese imports, triggered an immediate sell-off in tech and large-cap stocks. Crypto markets followed. Bitcoin plunged about 8.4%, and within just 24 hours, nearly $19 billion in leveraged positions were liquidated. Interestingly, many short positions were opened just before the announcement, as if some players had foreseen the event and were ready to pull the plug. That was no coincidence. It showed how powerful institutions, Whales and hedge funds can use information, leverage, and media influence to push prices far from their true, value-based foundations of labor, production, and real demand. Adam Smith foresaw this too. He wrote that free markets can temporarily lose their balance when driven by greed and emotion. And the October 10, 2025 crash was a modern echo of that truth. Prices in stocks and crypto were inflated by speculation, leverage, and hype. When the shock hit, policy change, panic, mass liquidation, prices fell faster than value could adjust. It was a short-term, overheating correction, a replay of the same old story: tulips, dot-coms, real estate bubbles, and now crypto and tech stocks. Each time, Smith's message rings through history. When price detaches from value, and a fall is inevitable. Forget that, and you become the classic buy high, sell low investor, trapped in overpriced assets with little real worth. But remember it, and you stay calm when the crowd goes wild, because you know, price can be manipulated, but value is always earned through labor, productivity, and real contribution.
Part 6. Economic freedom must go hand in hand with ethics. For Adam Smith, morality and economics were inseparable. He believed that true economic freedom only works when people learn to control their own greed. Smith never opposed making a profit. He simply warned that when people put personal gain above the common good, when money becomes the measure of a person's worth, then a free economy stops being a machine of prosperity and turns into a weapon of self-destruction. In the 18th century, Smith witnessed grain merchants hoarding food during famines, waiting for prices to rise before selling. 300 years later, the same thing is happening. Only now it's not grain, but real estate, gold, crypto, and stocks. People create artificial scarcity. They spread rumors, buy media coverage, pump prices, and then sell when the crowd begins to believe that prices will never fall. The sharks and whales of today are no different from the speculators of the 18th century, except now they have AI, leverage, and social media. But even as times change, Smith's law remains true. No prosperity is sustainable if it is not founded on morality. When greed takes over, the market goes mad. When people invest and forget real value, when they forget that money is a tool, not the goal, then all economic freedom becomes an illusion. Just look at the great crises of history. 1929, Wall Street collapsed under greed and leverage. 2008, Lehman Brothers fell because of deceit in finance. 2025, crypto and stock markets plunged under speculation and lack of transparency. Every one of them shares the same root cause. Prices rose beyond value, and ethics were left behind. That's why Smith emphasized moral sentiment, our capacity for empathy, restraint, and conscience. No one forbids you from becoming wealthy, but you must know why and how you do it. If you build wealth through wisdom, creativity, labor, and contribution, that is true prosperity. But if you build it through deception, manipulation, or blind speculation, that's just a bubble waiting to burst. The lesson for investors today is simple. The market may grant you freedom, but freedom without ethics will always lead to collapse. Wise investing isn't just about understanding numbers. It's about understanding people. And as Adam Smith once wrote, the market may regulate itself, but the human conscience cannot be left unattended. In the end, Adam Smith didn't just teach us how an economy works, he taught us how people should live within that economy. He never spoke about getting rich quick. He spoke about lasting wealth, the kind built on work, reason, and integrity. In a world where prices can be inflated by a single tweet, where rumors can create billionaires overnight and wipe them out by morning, Smith's philosophy stands as a simple yet powerful reminder. Prices can change, but value does not. Because in the end, The market will always find its balance, but conscience, trust, and morality once lost have no recovery cycle. So if you believe investing is more than just a game of money, if you see it as a journey to discover true value, then like this video, subscribe to the channel, and join me as we explore the books that changed how the world works and how we understand what real wealth truly means.